Okay, I'm excited because we're going to be doing something we haven't in a while, which is review a business book. We're going to be talking about Profit First by Michael Michalowicz. I don't know how to say his last name. You can look it up. But if you don't know, on this podcast, I read business books and then I tell you guys my thoughts on them related to photography, how you might be able to implement them into your own business or into a photography business. Profit First is such a good book, probably my favorite book at the moment. And I truly believe any business owner should read this book. If you are confused about finances or money at all in your business, if you're like, how do I manage my money? How do I pay myself? What bank accounts do I set up? How do I make a profit in my business? What do I do with that profit that I make? What even is profit? If you have any of these questions, then you need to read Profit First. It's such a good book. And also, we're going to be talking about all of those things in this episode to hopefully give you a clear understanding, at least a little bit. I'm no expert, okay? I've learned a lot from this book and I feel a little bit more organized around money. And so I'm just going to be sharing with you what has worked and what I've learned from this book. Profit First teaches you how to build healthy habits around money. And it teaches you that no matter what size of business you have, you should be making a profit, because that's the mistake a lot of businesses make. They think that all they need to do is grow their business, get more clients, make more money, and the profit will just come. But that's not actually the case, because in fact, even the huge businesses that you think would have a ton of profit are struggling because they don't know how to manage their profit. So profit is not a thing that only big businesses have. In fact, this is a direct quote from the book. 8 out of 10 businesses fail, and the number one reason they fail is lack of profitability. So we are going to find out today, how profitable is your business? The reason these businesses fail is because when they start to make more money, they also start to spend more money, and their business becomes a cash-eating monster. But when you're spending this money, you don't often feel like you think it's being productive. You think you're growing your business and moving towards your goals because you're reinvesting it back into your business, right? Every expense is going to help you grow your business and make more money. And so you justify all these expenses until eventually you have to take on debt. And maybe that's by getting a credit card or taking out a loan. But it's okay because you're growing your business, right? And then you're working your butt off just to keep your business afloat. And you forget why you started this business in the first place: to benefit you, to help support your life, to support your family. You created this business so that you could have freedom and flexibility, and you are just working for your business. And so this book kind of teaches you systems to create a business that works for you, not the other way around. You already know I'm going to be so honest with you on this podcast. And in 2025, I took on a lot of debt because I was stuck in that cash eating cycle of taking on so many expenses because I'm growing my business, because it's going to be worth it, and I'm reinvesting everything. And I took on more debt than I should have. And so in 2026, my goal is to pay off my debt, and Profit First also teaches you how to do that. Would you be able to tell me right now how profitable your business is? In this episode, I'm going to walk you through how to do an instant assessment of your business, which tells you the financial health of your business. And I know it sounds scary. Okay, it is going to be a little bit of math, I'm warning you, but don't be afraid because I'm going to make it as simple as I can. It's really not as difficult as it seems. If I did it, anyone can do it. But honestly, if you're listening to this episode on either Spotify or Apple, I actually do recommend going over to YouTube for this episode, because I'm going to be sharing my screen and showing you step by step how I do this instant assessment to determine the financial health of your business. Okay, so in this episode, we're going to talk about what profit actually is, a little bit of mindset around profit. I'm going to go over the 5 business bank accounts you should have set up right now. Like, if you don't have your personal finances and business finances set up separately in separate bank accounts, which, no judgment, I was there like a few years ago, and it was something that seemed really scary to me at the time. I was like, I just don't know how to do this. So don't worry, we're going to walk you through that. And then we're going to talk about allocating money, which I didn't know what that was before reading Profit First. So if that's where you're at, don't stress. And then I'm going to go over that instant assessment, like I mentioned earlier, figuring out where your business is at financially. And then lastly, I'm going to teach you how to cut expenses, because chances are there are some unnecessary expenses in your business you're paying for that are just eating your cash. And everything that I talk about in today's episode, I have learned from Profit First. So, like I said, I'm not an expert. If you want a detailed, like more explanation on this, go get the book and read it, because it is truly incredible. Okay, so starting with what is profit, the actual equation for profit is revenue minus expenses equals profit. So basically, all of the income you make throughout the year, whatever your total revenue is, minus whatever it is you spend in your business, and then whatever's left over is profit. And like, that makes sense logistically. However, this book teaches you that that equation is wrong and that you shouldn't run your business based on your profit only occurring by whatever is left over after expenses. You should actually take your profit first. So your profit isn't dependent upon how many expenses you have. Your expenses are actually dependent upon your profit. So this means no matter what size of business you have, whether you're making $1 million in revenue or $50,000 in revenue, your business can take a profit. Okay, we're going to talk about the 5 business bank accounts you should have set up. First of all, I do want to start by saying I'm like 99% sure you need to have an LLC for your business before you can set up a business bank account. Or I think maybe there's like certain types of bank accounts you can set up, but you're probably going to want to get an LLC. If you don't have one of those either, don't worry, it's not as scary as it sounds. I just looked it up online and hired like some kind of agency to create an LLC for me, and I just pay them yearly and they make sure my business is legally secure with all of the things that I need, and I don't do a thing. And it really wasn't that expensive either. The 5 accounts you're going to want to set up in your bank, and these are all going to be business bank accounts. I honestly just made mine all checking accounts. I didn't worry about checking accounts versus saving accounts because, well, I did a few years ago. I made a few of them saving accounts, but you have to have like a certain amount of money in saving accounts to keep them open. And I'll be honest, I was not very good at keeping up with the system. So there were times I had no money in the saving account and they got closed down. So to simplify it, I would just make them all checking accounts. Like, that's really the biggest thing about this whole episode and about Profit First is don't overcomplicate it. Like, don't spend so much time thinking about all the details. Really, just do it and you'll learn as you go. So your 5 accounts are going to be your income account, your profit account, your owner's comp account, your tax account, and your OPEX account. And don't worry, I'll break those down. I'll tell you what each of them are. So first, your income account. This is pretty self-explanatory. This is where all money that you receive in your business is going to come into this account. So any money you make in your business, from no matter what it is, goes into this account, and you want to link all other money apps to this account. So for example, I have my PayPal account linked to my income account. I have my Venmo linked to my income account. That way all money goes into that one account. But you don't want to have a debit card with this account because you're not actually spending money through this account. This is just where the money comes into. And then from this account, we're going to transfer the money out to the other accounts. That is what allocation is, which I'll go over that in a minute. But first, let's talk about the other bank accounts, what they are. So your profit account, pretty explanatory. This is where you're going to transfer your profit, a percentage that comes in from that income account, a percentage of that is going to go to your profit account. And then next we have owner's comp. This is what you pay yourself. So if you're like, I don't actually know how much money to be paying myself from my business, this is going to help you because it's going to, again, you're going to transfer a percentage that comes into that income account into your owner's comp account. And you'll always know how much money you have available to pay yourself. Okay, next is tax account. This is where you're going to be saving for taxes because your business should pay for its own taxes. If you're paying for taxes out of your own pocket, then your business is not working for you. So again, you will be taking a percentage that comes into that income account and putting it in the tax account. And your fifth one we have is the OPEX account, which I actually titled mine operating account. And this is basically where all of your expenses are going to go for your business. So your OPEX account or operating account is going to be the account you link your debit card to. So this is where you will pay out of. Okay, so to review, 5 accounts: income account, profit, owner's comp, tax, and operating. Okay, now we're going to go over allocating money to these accounts. And if you're like me and you didn't know what that was before this, it's basically just, it's kind of, you probably have an idea of what it is, but it's basically just distributing to different places. Allocation of resources, for example. I looked up the definition to try and explain it better, but I think you get the point. So basically, you're going to be allocating percentages into these accounts from your income account, and you're going to do this twice a month. And now you might be wondering, okay, how much money do I send into each of these accounts? The amount of money you put in the accounts is going to be dependent on how large your business is, but the book actually has a full breakdown table of how much money you should be putting in each of the accounts based on how much you make. So we're going to go off of if you make anywhere from $0 to $250,000 a year in your revenue. So that's not profit or anything. That's just how much income, your revenue. So I land in that bracket is the 0 to 250K. So that's what we're going to be basing these percentages off of. If you make more than that, then your percentages are going to be a little differently, and you can always just look up the profit first target allocation percentage table. So these percentages are going to be your target allocations. This means this is what you want to aim to be able to distribute into each account. However, it might not be where you're at, because if you're like me, you probably put so much of your money into your expenses and 0 into profit, or 0 into taxes if you haven't been setting tax money aside. So your percentages are going to be probably not where these ones are at, but we're going to go over that later. I don't want to confuse you. So your target allocation percentages, the amount of money you want to be putting into each of these accounts, is for profit, you want to set aside 5%. So 5% of what comes into that income account is going to be allocated to profit. For owner's comp, what you pay yourself, that's going to be 50%. If you're like me, I was not sending myself 50% of my income. I was underpaying myself, oftentimes not even taking a salary, and that just goes back to your business not working for you. So 50% of your income should go to your owner's comp account. Tax should be 15%. So 15% of your income is going to be allocated to your tax account. And then your operating account, your expenses, is going to be 30%. 30% of your income can be spent on expenses. And the book talks about getting into a habit of allocating this money into the other accounts twice a month. Just like creating this habit of sitting down on the 10th of every month and the 25th of every month and going into your income account, seeing how much money is in there, and then distributing that to your other accounts. The book goes further to explain how you are not going to touch your profit or your tax money in those accounts. Like, it can be tempting if your profit account starts to accumulate money, and then you'll see like, oh, I have an extra few hundred or extra thousand in my profit account, and then something happens in your business. Maybe your laptop breaks and you don't have the money to get a new laptop, and so you're like, oh, I'll just take that from my profit account. No, you can't do that. So this book actually tells you to go to a separate bank and set up a bank account where you can't withdraw money, like you can't take that profit and transfer your profit money into that bank account. So like you'd first allocate into your 5 accounts, and then you take that profit account money and you'd move that over to your bank where you can't touch it, so that you can never spend your profit, because this is the problem businesses have. They will just take that money from their profit account to fix the problems that occur in their businesses, which dig them deeper into a hole. So you don't want to do that. Basically, it's teaching you to run a business on less money. It's teaching you to be innovative, which will improve the health of your business. And honestly, you don't need all the expenses that you say you do. Even if you think you do, there is somewhere you can cut expenses, which are going to help increase your profit and increase the health of your business. So basically, it teaches you that, say you make $100,000 in a year. And it teaches you, if you can run your business off of $100,000, then you definitely can run your business off of $100,000. It's basically the envelope system, but in bank accounts, where you set aside like $10 in this envelope for the month, or like $10 in this envelope for groceries. It's like budgeting with the envelope money system, where it's like you cannot spend this envelope. If the envelope is out of money, then you don't have, like, you can't buy that extra thing at the grocery store if your grocery envelope is out of money. And it just teaches you how to be more resourceful instead of just accumulating so many unnecessary expenses. Okay, now I'm gonna do an instant assessment with you, and this is the part you're probably gonna want to watch on YouTube. Basically, I'm gonna be getting so vulnerable with you guys. I'm gonna show you my actual numbers that I made in 2025, and we're gonna determine the health of my business from 2025. And I'm gonna walk you through it step by step. So let me share my screen. Okay, so right now I'm in Google Sheets. I created a little template outline for the instant assessment in Google Sheets so that you can just plug in your numbers and it will spit out the information you need to know. So I tried to make this as simple as I could for you guys, and I'm actually going to give you this template, this blank template right here. I'm going to include it in the show notes. So if you want to download this and be able to just plug in your numbers and follow along with me, you can do that. Go to the show notes and get that link. I created a key here too, so you can kind of follow along and see what all of these things mean. But basically, you don't want to touch the purple cells, the cells that I've highlighted purple. I put equations in them so that it will automatically generate the information you need to know. So you're just going to fill out the other ones, which these ones right here that are kind of gray, we don't need to touch either. They're just space. Okay, so we're going to start over here filling out this column to determine our actual numbers. This is where you're going to need the revenue you made for the previous year, the expenses you had, and how much you paid yourself. You're going to need all of those numbers, which, again, don't overcomplicate it. You can get this from a variety of different places. If you use QuickBooks, you can generate it through QuickBooks or get it from your accountant, or you should have it in your from your taxes. If you did taxes last year, it should all be there. Or you can simply go to your bank and add up. Or if you use like HoneyBook, it can tell you stuff. So get it from wherever is most convenient for you. For me, I got it from QuickBooks. I got it from my profit and loss statement. And I actually screenshotted those and included them here so that we can go through it together. Okay, so we're starting with top line revenue. And again, guys, if you want a more detailed explanation, just read Profit First, because it literally explains it step by step. I have the book open right now and I'm going through each step with you. So top line revenue is just your number of real revenue. Before you take out any expenses, how much money did you make? So this is a screenshot from my profit and loss statement. Like I mentioned, my income or gross profit for 2025 was $53,000, which 2025 was a bad year for me. Okay, I am like a little self-conscious sharing all my financial details, but yeah, 2025 was rough. It doesn't matter how much you made. I'm just grateful to have the job that I have. So I'm going to take that number and copy it into here. And to simplify it, I'm not going to worry about the exact number. You get the you get the gist. You can put your exact number. Okay, now we have materials and subs. So if you're a photographer, this column is probably going to be irrelevant to you. Basically, materials is if you sell a product, which I do sell products now. I sell prints. However, I don't sell enough. Like, it's not a big enough percent to put it in this column. It also is for subcontractors. So this is, you can either hire like employees or subcontractors. Employees are under your actual business. You have to pay them payroll and stuff, whereas subcontractors are businesses that you just hire to help you with something specific with your business. So for example, that would be like my personal assistant who I hired, maybe your accountant, people like that. But again, just don't worry about this column because you probably don't have a high enough expense number to even really count them. So again, make it as simple as you can. If you don't know what to put in this column, just put a 0. So the first one we filled out was like your gross profit, and then your real revenue is going to be that top one minus materials and subs, so minus your products and subcontractors you paid to determine your real revenue number, which we put a 0. Most of you will probably put a 0. So your real revenue number is going to be the same as your top line revenue number, which I forgot to put an equation here, but basically it would just be your top line minus materials and subs. And there we go. You can see the table is already starting to auto fill out itself. We're moving on to your actual profit. This is the amount of profit your business made in whatever year you're doing this for. For most of you, it's probably going to be 0. For me, it was 0. And this is a direct quote from the book. If you think you have a profit, but it is not in the bank and was never distributed to you as a bonus, this means you don't really have a profit. It is likely you used it to pay down debt from previous years. So if you don't know your profit number, you probably don't have a profit, and you can just put 0 in that cell. Okay, owner's pay. How much money did you pay yourself? I have a screenshot from my profit and loss statement of how much money I transferred from owner's draws. So that number is $24,000. So I'm going to put that there. If you don't actually know how much you paid yourself, how I used to calculate this is I would just take my revenue minus my expenses, and then whatever was left over, that's what I put as owner's pay because that's what I sent myself. Like, I would just take money from the business whenever I needed it. I never actually paid myself a salary. And so that's how I calculated the owner's pay before. In the tax cell, you want to put down how much money your company has paid for taxes on your behalf. The likelihood that your company paid your taxes is probably pretty low unless you're just good at setting aside money for taxes. So you're probably going to put a 0 in that cell as well, which I am too because I did not set aside money for taxes. Basically, if you had to scratch together money to pay taxes at the end of the year, your company did not pay for your taxes. Okay, and then the last cell we have here in your actual money is your expenses. What was your expense number? So I'm going to go back here to my profit and loss. My expenses were $41,000. So if you were to add this up, the amount of money you have for profit plus the amount of money you paid yourself plus the amount of money you set aside for taxes plus your operating expenses, all of your expenses should equal your revenue. So basically, all of those things come out of your income. And it's okay if they don't. If you're watching, you can see my expenses actually don't add up. Let's do a little equation. Oh, okay, I made a mistake. I was like, why isn't it adding up? Instead of 41,000, I accidentally put $41, not 41,000. So there we go. So you can see I just added up those 4 cells and it got me 65,000. Where my real revenue number is actually 53,000. So it's like, wait, how do I have more money here than what I actually made? And this is actually really common if you run into this problem. So don't worry, the book even addresses it. It says the numbers don't need to add up perfectly. This is simply a system to get us in the ballpark of where we are and then tell us where we need to start going. The goal is not to have perfect numbers, it's just to understand roughly where we stand now. So that's why I keep saying simplify it as much as you can. If you don't know, just put a 0 or put in whatever it is you do know and keep moving forward with this. Okay, and then it addresses the problem we just ran into, which says, double check your work by adding up your profit, owner's comp, taxes, and operating expenses to see if you get your real revenue number. If you don't get this number, something is off. Double check your numbers to see if you missed something. Once you make sure all the numbers are as accurate as possible, what you're actually going to do is adjust the operating expense number either up or down to get your real revenue balance. Now, it's funny because it says that this is something accountants would frown upon, is doing this, but again, we are just simply trying to get in the ballpark. So my number is too high, so I need to take away expenses. My goal here is to get this number to equal my real revenue number. So basically, to determine how much I need to subtract from my operating expenses, I'm going to take this number that we just added up minus my real revenue number, 12,000. Okay, so I need to subtract 12,000 from 41,000, and that gives me 29,000, and look at that, 53,000, 53,000, the numbers match up. Okay, we have the actual numbers done. Moving on to the second row, or the third row in this table, which is TAP. You can see in the key what that stands for, but it stands for target allocation percentages. And this is what we talked about earlier, the percent of money you want to be transferring into those accounts from your income account. And like I also mentioned earlier, the book has a table for how much money, what percentage of that money you want to be transferring based on how big your business is, how much money you're bringing in. And we went over this earlier. You're going to want to transfer 5% to profit, 50% to owner's pay yourself, 15% to taxes, and 30% to your operating expenses. So this is something you don't need to change unless your business is making more than $250,000 a year. Your profit first number is the amount of money that should have been moved to each of these accounts based on how much revenue you made. So what this means is if you were following your TAPs, your target allocation percentages, and allocating that money to each account, then last year I should have made $2,000 in profit. I should have paid myself $26,000, and I should have set aside $7,000 for taxes. But you can see I did not do that. So this is your profit first number. This is your actual number. And if you double click it, you can see that equation that I put in there. So basically it's your real revenue number times your percentage. Okay, moving on to the next column, which is delta. The delta, as you can see here, is your actual number minus your profit first number. And it's likely that these numbers will be negative. So you can see in the percentages, these are all negative because if we go back, you can see my actual profit was $0. What my profit should have been was $2,650. So the difference is $2,650 because there was zero profit. Now the fix, this is going to tell you what you need to do moving forward to fix this number in order to reach your target allocation percentages. In order to get that 5% profit, I'm going to need to increase the amount of money that I'm allocating to my profit account. So basically a little key to figure out the fix. If the number in delta is negative, put increase. If the number in delta is positive, put decrease. Okay, so moving on, owner's pay. I should have paid myself $2,500 more than I did. So we're going to put increase. Taxes, I did not save anything for taxes. I should have saved $7,900 more than I did. And then operating expenses. It's likely that your operating expense is going to be a positive because this means you put too much of your money into your expenses. You accumulated too many expenses. So moving forward, you actually need to decrease your expenses. So I had $13,000 worth of expenses that should not have been there in order to have a healthy business. Okay, so now you know what you need to do moving forward, how you need to allocate your money. The next thing we're going to talk about is CAP, current allocation percentages. So we talked about how you're going to want to move like 5% of money into your profit account, 50% of money into paying yourself in order to have a healthy business, and this money comes from your income account. However, if you're like me and your business's health is not great because you haven't been doing those things, you don't want to start right away at those percentages. You don't want to right away send 15% of your income to taxes and 5% of your income to profit, because you still are accumulating those expenses, and it's likely that you will fail. You will not be able to keep up with this system because you haven't cut down your expenses enough yet. So the purpose of this is to do it super slowly, 1% at a time, so you hardly even notice the difference, and this is going to help you to slowly increase the health of your business. So to figure out what percentage of money you currently were allocating to each of these different places, so this is going to figure out what percentage of money you sent yourself out of your total income, what percentage of money you put into expenses out of your total income. So for me, you can see I didn't put any percentage into tax or into profit, so those are at 0%. I paid myself 45% of my income, so almost 50%, honestly, not bad. I'm pretty close to that goal of 50%. And then my expenses were 54%, whereas they should be 30%. So here you can kind of compare how much money you're currently allocating to these different bank accounts versus what you should be allocating. So since I have zero profit, I'm not going to start by setting aside 5% of my income for profit, because again, that is the target. That is my goal. Right now, my current allocation goal is to set aside 1% of profit. Okay, so I just merged this cell right here because this is both your cap, which is your current allocation percentages, which is again how much money you're currently allocating into those different bank accounts that we talked about. So this number right here is going to help you get to your target goal of whatever this number is over here in your taps. And you're going to increase it or decrease it depending upon what you calculated earlier in the fixed column. So 0%, we're going to increase it by just 1%. I'm going to just start at 1% because I want it to be super small. I want this to be manageable. I gave myself 0% profit last year, so I'm going to increase that and give myself 1% profit. So that means I'm going to need to allocate 1% of my income twice a month to my profit account. Next, this is the owner's pay, so how much we pay yourselves. I paid myself 45%. I'm going to bump that up to 46%. And I made it an even number just to simplify it. Okay, this next column is the tax column. Set aside 0% for taxes. I need to increase that, so I'm going to bump that up to 1%. Okay, and then lastly, we have our operating expenses. You can see I put 54% into operating expenses instead of just decreasing this by 1%, like we've been changing, just 1%. I'm going to decrease it by 3% because it needs to add up. All of these four numbers need to add up to 100%. So decreasing the operating expense by 3%. That leaves me at 52%. So now when you sit down twice a month on the 10th and the 25th, you're going to look at how much money you have in that income account, and you're going to determine, okay, I need to put 1% of this into profit. I need to put 46% of it into paying myself. I need to put 1% aside for taxes, and I need to put 52% into my operating account to spend on expenses. Now, I've made this even simpler for you so that when it comes to the 10th and 25th of each month, instead of calculating those percentages manually, you can come back to this spreadsheet that I have made you, save it to your Google Drive, come back to it. What you're going to do is put your income number into this cell right here. So say you have $1,000 in your income account. This is going to tell you how much money you now need to transfer to those different bank accounts. So if you have $1,000 that came into your income account and it is the 10th of the month, it's February 10th or whatever, you're going to sit down, you're going to input $1,000, and that's going to tell you, okay, send $10 to your profit account, right? You're putting that $10 in that envelope that says you cannot use this, you cannot touch it. you're going to put $460 into your owner's pay. There's a typo here. Let me just change that really quick because that is 10% and not 1%. We don't want to be putting 10% into taxes just yet. Okay, so now you're going to transfer $10 into your tax account and you're going to transfer $520 into your operating account. This lets you know how much money you actually have to spend so you don't overspend it. And right here, sum, you just want to make sure, double check that your sum equals the same as your income. And you're going to want to change these percentages based on what percentages you calculated up here earlier in your caps, because these are just my percentages. This percent should update automatically for you in the equation, but just change the title right here. If maybe you're increasing the amount you're putting into each account to 2%, you're going to want to change that to 2, and then you'll want to also change it to 2% over here in order for that to update. I will fix this formula for you guys. There we go. So that will automatically update based on what numbers you have here. And you're going to increase these every quarter. So if you started with just 1%, you're sending 1% into profit, then at the end of the quarter, you're going to sit down and maybe you increase it by another 1%. So now you're setting aside 2% for taxes or 3% for taxes. And you sit down and you look at these percentages every quarter to see where your business sits financially. Okay, I know that was a lot. And if you haven't read Profit First, I bet that was pretty confusing for you. But I tried to make it as simple as I could, and I promise you it's not as scary as it sounds. And once you read the book, come back to this video and go through it because the book truly explains it so clearly, and then it'll be helpful to have that walkthrough that I just did with you so that you can set this up for yourself. And like I said, you can download the template in the show notes. Please let me know if you found this helpful for you at all, because this is something that has seriously been a game changer for my business, is knowing where I stand, knowing how much money I need to be setting aside in these different accounts and building those healthy habits around money. Now we're going to talk about the last thing I told you we would, which is how to cut your expenses. Because if you're like me and you just completed your instant assessment and you found out that you are sending way too much of your money into operating expenses and you need to cut down on expenses, here's how you do that. You are going to print out all of your expenses, whether that's your bank statements or your expenses from QuickBooks. You're going to print that out and you're going to grab a highlighter and a pen and you're going to go through that expense sheet, and next to every single expense, you're going to put either a P for profit, a R for replace, or a U for unnecessary, because every expense can be calculated into, does it make you profit? Can it be replaced for something maybe a little bit less expensive? Maybe you can downgrade your subscription. Maybe you don't need the Pro Premium subscription. Or is it unnecessary? Is it something that is just eating up your cash and it can be completely cut out? And once you categorize all of your expenses, you're going to know where all your money is going and if you're spending a lot on unnecessary expenses. This is actually where I'm at right now. I need to really look through the last year and figure out what it is I need to cut expenses on. Oh yeah, I don't know if I said that, but print out your expenses for the last 12 months. Like I said earlier, you're actually going to become more innovative when you're forced to be resourceful and cut out these expenses, and you're going to create an amazing business on nothing. That's how you get a good profit. And again, I know it's hard if you're someone who's like, there's no expenses that I can cut out. Let me tell you a story. Last year, I started comparing my work to other photographers on social media a little bit. I kind of fell into this really bad pattern of doing that, and I would see everyone on social media was using the 24-70 zoom lens. I was obsessed with it. I had convinced myself I need this lens. It's going to improve my pictures. It's going to make me such a good photographer. And I just seen so many people using it or so many people wanting it. And so I was determined to upgrade my camera gear. I told myself it's time to upgrade my gear, and I justified it because I had a lot of reasons why I should be able to upgrade my camera gear. I can charge more for my work because my work will be better. My clients will love their galleries more. I'll feel inspired again. And it is time for a gear upgrade for me because I have had the same camera and lens for the last 5 years, and I bought it used. And like on my camera, there are some buttons that don't work. I cannot see through my viewfinder. It doesn't work. My screen is scratched up, and when it's sunny outside, it's incredibly hard to see the screen. My autofocus is off. There are a lot of problems with my current camera setup. And so I had convinced myself that I need to upgrade my gear. But like I mentioned earlier, I accumulated a lot of debt, and truly I did not have the money set aside to upgrade my camera gear. My business was not working for me. I was just not financially in a place where I could do that. But I found myself trying to figure out a way, like, oh, well, if I sell these things, then I'll have the money to get a new camera. Or if I get this many more clients, I'll have the money to get a new camera. And that is the cash eating monster right there. That is the mindset that is going to get you stuck in a hole and stop you from making a profit. Once you implement the habits from this book, you are going to have that extra money to spend it on those things that you want, or those things that you know will actually improve your work and make you happier and make you have more fun in your business. But right now, if you don't have these healthy money habits in place and you are just continuing to buy whatever it is you want because you think it's necessary for your business, you're never going to be profitable. So before you can justify big expenses like that, you first need to check the financial state of your business and implement these healthy money habits. And I realized this. I realized, okay, I'm already thousands of dollars in debt. I can't drop $5,000 on new camera gear. But you see how easy it was for me to convince myself that I needed it? So instead, I thought about it in a different perspective. And I told myself I would rather save and feel financially stable when I make this investment so that I can get my dream camera setup, the one that I actually want. And I'm actually determined that I'm not going to let my camera gear hold me back. I'm not going to let that be a crutch into me thinking that is why my work is not as pretty as the other photos I see on social media. So I became determined to work harder to get even more incredible photos that I was proud of with the camera gear setup that I have right now. And it forced me to innovate a little bit. It forced me to push my creativity. Yes, I might be working harder at my photo shoot than I would if I had a zoom lens that I could simply just zoom in and out with and get that beautiful bokeh background. It's forced me to innovate. Maybe I can get that look in Photoshop instead, but I'm not going to let my camera gear hold me back from getting the results in my photos that I want. Because in reality, your clients are not going to know the difference in your camera gear. You might tell yourself it's for your clients so that you can have better work, but I truly believe it's not the camera, it's the photographer, and you can get incredible photos no matter what camera you use. So if this is where you are and you feel like an expense you have is necessary, I want you to sit down and actually think, okay, how necessary is this? Is there a way you can innovate or work around it in order to set yourself up in the future for success? And look, I haven't bought that new camera gear yet. I'm still working with what I got, but I know I'm going to get there. If you found this helpful at all, please share or leave me a review. It helps my podcast grow, and I really just want to help you to have a photography business that works for you, that you're not just working your butt off, feeling burnt out. We're in this together. I am taking you along step by step, everything that I learned, because trust me, I know how hard it is to be a business owner. I have been in the trenches, but I am determined to make this work, and I'm taking you along with me. So until next time, here's to growing our business together.